So, if you guys want to learn how to trade options, purchase my ebook located at wordly41.gumroad.com. And basically, how did I make $1,405 trading Amazon put options? So, yesterday I bought 3 put options at $13.55. So, looking at yesterday's chart on the 30-minute time chart. 13.55, which is this candle right here. So basically, I bought Amazon put options as soon as it approached the 50-day moving average, and then 14.21, which is, I'm pretty sure it's, let's see, 14.21, this candle right here. So basically, once I saw that the previous high was 188.58, I was like, okay, let's see if it can get close to the number 188. I don't care about the cents that it is. I'm just gonna see if it can reach that number of 188, and that did happen. So as soon as I saw that number of 188, I bought 1 put option at that candle, and then at 14.34, I bought another put option. So this candle, not this candle, but the very next candle, I was like, okay, it looks like Amazon is having trouble breaking out of that resistance level of 188. So I bought another put option as soon as it reached 188 again. And so that was my last put option of buying Amazon. So the very next morning at 9:30, so literally at the opening bell of the market, I sold out the position. The stock, well, not the stock market, but Amazon opened at 182.01. I sold out my position as quickly as I could, and when I sold out the position, it was up 55.21%. Basically, I made a gain of $1,405 just trading a couple of Amazon put options. So it's basically what like what I told you guys. Basically, what you're trying to do is, step 1, get into either a call or put position, right? For example, I'll talk about this trade right now, right? So basically for Amazon, right? So you can see that yesterday, right, Amazon was pretty much having trouble breaking out of this like 20-day moving average. You can see it here. This candle tried breaking the 50-day moving average and got rejected by it. And then you can see these previous candles right here, this one, the 12, the 11:30, and the 11 candle. And pretty much this one to the 13 and the 13:30 candle had trouble breaking the 180-day moving average, and they were pretty much getting rejected by the 180-day moving average, right? So basically, what you're trying to do, right, is basically step 1, right? As soon as you see that a particular stock is having trouble by a certain moving average, is trying to break above that certain moving average, you're basically trying to buy put options. And then let's say, oh, but now it's completely broken over the 180 and the 20-day moving average. So your next step would be, as soon as it approaches the 20-day moving average, and yeah, basically when it approaches it, buy another couple of put options there. Not a lot. Keep your money on the side, that way in case you do see that, oh, now Amazon has broken above the 20-day moving average and it looks like it's going to try to break the 50-day moving average. Basically, you'll have enough money on the side. That way you can buy more Amazon, whatever option you're trading, right? But for this trade, right, that I'm explaining to you guys, right, basically hold on. So basically, as soon as you see that, oh, now Amazon is above the 20-day moving average and it's reached the 50-day moving average, basically your next step here would be buying more Amazon put options. That way your average can be in a good spot in a way. So let's say all of a sudden Amazon starts going down throughout the day, right? basically your position will be in a green a lot more faster if all of a sudden Amazon starts going down. So basically what you're trying to do is you're trying to dollar cost average, but with options. Usually dollar cost averaging is more with with stocks that you're investing into the long term. Me personally, I like to use that strategy, but with options. Generally I guess you could say, what I like to do when I start seeing that, okay, the game plan is usually like this. So I sell at the position and I try to aim for a win rate of being up 5 or 10%. If my position is up 5 or 10%, I sell at the position, move on to the next trade. Now, if my position is all of a sudden, down maybe like 10 or 20%, all of a sudden, basically, if it's down 10% and I'm feeling like not really confident, like if I'm feeling confident, right, in the trade, the max loss that I'll take by most is 20%. Now, let's say I'm not feeling really confident in the trade and I feel like, it looks like it's completely ignored the technicals. It's just completely ignored, support and resistance levels. It's just doing its own thing. I'll just exit out the position for a small 10% loss, and I'll just move on to the next trade, because sometimes the market doesn't really have to do what your game plan is in a way. So basically try to have try to measure your risk tolerance in a way. That way you don't, end up losing a lot of money trading in the stock market. That is specifically options. Now, if you're trading stocks like mega cap stocks, right? You're good, because eventually these mega cap stocks have to make a comeback. Basically. And so what I try to do is, I try to aim for a 5 or 10% win rate. And if the position is, going in my favor and I'm feeling really confident in the trade, I try to mostly aim for at least a 10 or 20%. Really, I try to aim for a 20% win rate. Most times I try to aim for a 30% win rate, but most of the times I try to trade within like my confidence win rates of, if I reach a 5% win rate, okay, I'm out the position. If my position is up 10%, I'm out the position, because I want to secure the profit and move on to the next trade. So basically, try your best to use the moving averages as your friend, and try to use these support and resistance levels throughout the day as your friend as well too. So that's pretty much it. That's basically how this trade went. And if you guys want to learn how to trade options, purchase my ebook located at worldly41.gumroad.com. As always, this is not financial advice. As always, do your own research. As always, take care and bye.